So there's no doubt about it. You got this amazing bullish sentiment out there. Risk on. We see it in cryptocurrencies. We see it in stocks. We even see it in some effect in gold and in oil. But for me, I'm not buying it. I think the market is coming off of this, what I call the January effect, where you had all the tax loss selling taking care of a lot of sellers in December. That kind of makes the markets generally buoyant in January. Then you throw in the mix of the Fed obviously coming down to the wire in terms of just hiking another 25 basis points, maybe a couple more times, and the market's getting that giddiness. Remember, the market looks 6 months out. So they're saying, okay, within 6 months, the Fed's done hiking. What they're not recognizing to me is that the Fed will not be lowering rates in 2023.
Gareth Soloway, popular technical analyst and chief investment strategist of InTheMoneyStocks.com, is not completely sold on the ongoing rally in the cryptocurrency and stock markets. Over the past 2 weeks, as Bitcoin climbed to $23,000 and the overall cryptocurrency market cap shot to a multi-week high of over $1 trillion, Soloway has repeatedly warned that the rally is a bull trap and not the beginning of the bull market, as many believe. In a recent interview with the tdameritrade network, the veteran trader discusses his near-term bearish predictions for the top cryptocurrency asset. According to Soloway, the ongoing rally is just the January effect and the market's relief that the Federal Reserve is pulling the brakes on its aggressive interest rate hikes. However, the popular technical analyst says the relief is too premature. He adds that the market seems to be ignoring the fact that inflation is still well above the Fed's 2% target and the economy is heading into recession. In his interview, Soloway explains that when the market finally catches on, there will be a day of reckoning, which could see Bitcoin drop to his previous prediction of $10,000 or $9,000. However, before that happens, Soloway believes the ongoing rally could take Bitcoin to $25,000. He has similar predictions for the stock market as illustrated by a Tuesday tweet. The tweet reads, "Stock market warning. The S&P index and NASDAQ are sharply higher, but volatility is not dropping. This tells the trading community smart money is buying protection and to be careful. This isn't to say we can't go up for a few days, but is a bigger signal of trouble looming." Before we listen to Gareth Soloway on how he expects the economy to impact the markets in 2023, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy the video.
The thing is, I mean, it's just common sense in that you have inflation that, yes, it's coming down. The first chunk of inflation, it comes down quickly. That last little bit from 4% to 2% is going to be really, really sticky due to wage increases and all these other factors. And that's going to keep the Fed very nervous about replicating what we saw with Volcker back in the 80s, where inflation roared back. And they're going to be very, very careful not to lower rates until things economically get so bad. And I'm not talking about, 5% unemployment. I think the Fed would wait until probably beyond 5% unemployment before they even think about cutting rates. And the market is just kind of going on this hopium, which you understand, right? I mean, the market has been conditioned for the last 10, 15, 20 years to really always think that the Fed will bail them out, even when the Fed talks tough. And so I think the market is going back to the old playbook of saying, hey, listen, let's react to what the Fed does, not what they say, versus them saying right now they're going to be harsh and not lower rates. And ultimately, I think that's where the market's having a disconnect. But like you said, it doesn't mean the markets can't rally in the near term. I just think we have to be very aware that the Fed, there is going to be a cliff at some point where the market says, wait a minute, yes, the Fed's done hiking, but we're not going to see these cuts. There will be a day of reckoning where they realize that. For instance, I think Bitcoin at most has upside to about 25,000. 25,000 to me is a confluence of major resistance. So I'm going to actually start to look to short it around that level if we hit that in the next couple days or weeks. And then on the other side, there's some opportunities on the short side. Like I started to nibble at a short on Apple today. That's hitting a key gap fill, a technical trend line, and also even natural gas. I mean, there's always opportunities in the market. Natural gas hit the $3 level, which is a major technical support. It's down something like 50% in the last couple months. There's a swing trade opportunity there for a snapback to 360 or so, which again, in this market, you just kind of look for these little opportunities and kind of print money as you go. One of the things, by the way, to mention is that today with the market rallying very early on, one of the things that struck me was that the VIX was not falling dramatically like you would anticipate. And what that tells me is that big money is starting to accumulate protection by buying the VIX. And again, that's something to look for. So for me, that's exactly what I'm doing. I'm shifting into defensive names, a Lockheed Martin that's pulled back significantly recently, and other kind of defensive plays while looking to short the high cap tech numbers that are coming out in the coming days over there there with Apple and some of these other players that have seen big moves in the upside in the recent days.
The real downside targets that we discussed earlier as being possible this year, 10,000 on Bitcoin, et cetera, do you still think that is a first stop before your longer term bull case?
I do. I still think that, again, what we're going to see is this kind of regulatory framework be announced. That's going to give a little bit of confidence to bigger investors. But the big issue later in 2023 is that we are going to see the economy entering recession. The S&P 500 probably does take a bigger leg lower. And my thought process is that as risk assets sell off significantly, Bitcoin and crypto will get caught up in that and ultimately see a big hit down. So 10,000 still looking like it's the downside in Bitcoin.
Meanwhile, a new crypto.com report details significant milestones in cryptocurrency adoption in 2022. According to the report, there were 425 million crypto owners as of December 2022. The report also reveals that 219 million of these crypto owners own Bitcoin, while 87 million own Ether. To arrive at these figures, the financial services company said it used a combination of Bitcoin and Ether on-chain data, survey analysis, and some internal data gathered over the year. The exchange's research and insights team noted that these figures were in spite of macro headwinds, including high inflation, the conflict in Europe, supply chain disruptions, and lingering effects of the COVID-19 pandemic. Despite these headwinds, global crypto adoption grew by 39% from 306 million in January to 425 million in December 2022. According to the report, two notable events contributed the most to the growth in Bitcoin ownership last year. The events are the adoption of the leading crypto asset as a legal tender by the Central African Republic and global investment Goldman Sachs offering its first Bitcoin-backed loan in April 2022. The report also found the merge Ether's final transition to proof of stake as the greatest contributor to the token's adoption in 2022.
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right. iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
What are your thoughts on Gareth Soloway's January effect prediction and the crypto.com adoption report? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel, turn on post notifications for more videos, and hit the like button. Everything you do helps with the YouTube algorithm so our videos can reach more viewers. Thanks for your support and thanks for watching the video.